Hello, welcome to the show.
Hello.
My name is Seph from Gratitude, the Good People team, and this is
Hi, my name is Moses. I'm from the insurance guys from Gratitude. Good evening, everyone.
Good evening, everyone.
So today's our topic is going to be a little bit special, I guess. All right. So the topic is don't get caught off guard. All right. Insurance tip for your at 20s, 30s, 40s and beyond. All right. So
And before we start, please help us to like, share, and comment. So share this to people that you think that they would want to look, or you think that they might have some questions about about insurance, that they can just comment below, or they can DM us. You can DM Seph, you can DM to Moses.
Thank you. All right. So if you have any questions, feel free to throw in. All right. And we will answer it accordingly. All right. But let's say if you like to PM us personally, so some questions you feel shy to ask on the during the live, you can just PM any of our numbers. All right, which is right in front of the screen. Okay.
Okay,
Alright.
a special announcement today before we start everything. So recently, I'm not sure whether you have heard about this, but AIA is actually doing something very special.
Oh,
And they call it Only Once.
only once.
Yes. So what happened is this, for people who cannot buy insurance already, maybe they have some health issue, they are being declined, or they cannot buy standard insurance, they will always have loading or exclusion. Here's the good news. If you have AIA insurance that is at least 10 years from now, you can send us your IC number. We can help you to check whether or not you get this special guarantee issue offer. So this guarantee issue offer meaning that it is a top up on top of the current medical insurance that you have. Once we check with your IC, and if you've gotten it, you will guaranteed to dapat, guaranteed to receive it
dapat.
if you sign up.
So
Yes.
just need to full name and IC.
Full name and IC. Actually,
Alright.
with IC alone will do actually.
Okay.
But with your IC number, we'll be able to help you to check. So the benefit of this is that there's no medical underwriting, there's no financial underwriting, and and there's no medical report. So it is very easy. You don't have to declare anything at all actually. So you will always receive it. There will be no waiting period. So done with this, we are going to repeat this announcement later. And let's start our show. We will start our show with a standard disclaimer.
All right.
So this live show will not meant on any insurance company names. We will not try to. We will try not to mention any company names. So when you ask question, don't mention company name. You can use alphabet to represent it. So we wanted to avoid potential legal issue. And second, all content shared is based on personal experience from us, from me, Seph, and from us, from Moses, and our opinion only. It does not constitute legal or financial advice and cannot be used as court evidence. And viewers are welcome to engage, but please be respectful. Don't shoot. I mean, you can shoot us, but don't use vulgar words lah. No rudes or offensive language is allowed. Let's maintain a positive and respectful environment for discussion. You can be very kicked on. I can be very kicked on also, but don't attack the host, the hostess, and the guests. Okay?
All right. Another disclaimer from us. Last time our show is very formal. All right, but we decided to make it a little bit chill. All right. So usually last time we tried our very best to use proper English, but this time since we are in Malaysia, right, we all from different races background, so we gonna keep it rojak a bit lah. All right. So just chill and enjoy the live show. All right. So we're going to have mixture of English, Malay, and maybe a little of Chinese and Tamil and random slang here and there. All right. So we mix up a bit. Don't so stress. All right. I know if you got a lot of complaints, it might have a little bit of frustration, but deliver it in a much more relaxed and chill manner. All right. We can have fun. All right. We can have fun in the show, have fun in complaining, have fun in asking questions and giving you answers and everything.
But
all right.
please engage with us. Comment down below. Then again, like, share, and comment below so that we can have more fun now, actually.
Definitely. All right. So everyone, to our viewers there, so just chill and enjoy the show. All right. Okay, Seph, Pass to you.
All right, so for today's live show, the topic is going to be don't get caught off guard, insurance for 2030s and beyond. Wow, some of the people will say that, wow, sounds a bit odd, like insurance also got age one. But don't worry. So it's not so much about the age, but the life stages.
Yeah.
So don't worry, we are not here to stress you out. In fact, with the balik, we are here to try to make it easy for you to understand. And so, Moses, can you tell us something about our topic today?
Okay, as we mentioned just now, it's like don't get off guard. Insurance tip for your 20s, 30s, 40s, and beyond. All right. So for us, in every age, you are experiencing different process of life. You are at a different stage. Some people they are at certain stage earlier. Some people might not. All right, and then your life experience might change. All right, throughout the journey. So different life stage, you have different goals, different focus. So this topic, this live show today is to ensure that how we can help you in making your financial protection planning much more easier. All right, because for me myself, there's a time that if I'm looking at life stage, when we are kids, right, we don't even know what is insurance. All right, but at that time maybe you just seated at home playing with your toys and whatever, and then somebody come to your house. All right, somebody come to your house and then talk to your parents, and then your parents signs a few documents. All right, and then they will just tell you, oh, well, we have did a saving for you. We have trying to put aside some money so in case anything happens, right, you'll get covered. But
you don't understand.
We don't understand, right? So, yeah, so that is the time when our parents are experiencing certain stages in their life, and then they think that this is important. The planning is very important. All right. So, in this show, we are going to focus on how to make sure that we had a sufficient coverage. All right. So, because we are in this business for me, it's about 10 years.
For me, it's about 5 years.
5 years, right. So we know that how to get a sufficient coverage for ourselves and for our clients. So I would like to ask you a question, Seph. Do you remember the first time you bought your insurance, the first insurance policy that you bought, and then what is the coverage that you focus as your top priority at that time?
I remember my first time. Okay, I used to work in corporate, so I had a colleague from another department. He had a terrible accident, and it's quite bad that the insurance that provided by the company is not enough to cover the total cost. So he has no personal insurance, and he has to use his money to pay for the medical bill that is not covered by the insurance provided by the company. That gave me an alarm lah. So I was like, oh, I should really have this. I should have a medical insurance for myself just in case things like this happen to me. So during that time, I actually contacted a few agents from different company and to ask them to quote for me. Some of them did ask me what's my budget. Some of them did not. They would just quote me whatever they think that is suitable for me. After talking to few of the agents, I signed up my first policy. It was not the budget that I provided to them. It's actually higher than that. But the agent convinced me. She told me that, yes, you need to have a good medical coverage.
Okay.
It was. I actually chose. Okay, I'm not supposed to say the brand, but I actually chose company A. They have this product where it's an investment linked product. So it has medical, it has life, it has critical illness. And the thing that really captured me is actually a vitality. Because I went to gym. I started to went to gym that time already when I bought my first policy. Like that.
Okay. All right. So if you ask me what is my first policy, I bought my first policy when I'm second year in my university. All right, because that time I was active in sports. I represent my university for rugby. I was training in rugby, and then I found out that most of my friends in the team, they don't have an insurance coverage, and then I was here alone in West Malaysia. All right, and then in case if anything happens to me, what can I do? All right, And then I see some of my friends, they've been waiting for the money to actually go and go for their surgery because we have sports injury, especially as a rugby player. We always have injury with our knees, with our shoulders, and everything. All right. So I approached my friend. All right. At that time, she was doing insurance. So the first thing I looking into is a medical insurance. It's a medical insurance for myself. All right. So that is my top priority at that moment. That is my top priority at that moment. So how do I pay? Using my allowance, actually. Yes, using my allowance, using my PTPTN money, because that time I got full loan. So I set aside a bit of budget. So every month I pay about 180 to 200 like that.
Oh.
Yes, 180 to 200 like that. And then I was like, oh, okay, now I can play the sports and enjoy in a peace of mind. All right, in case anything happens, I don't need to call my parents and say, I need money for surgery. And then that time the nearest hospital to me is actually a government hospital. And still remember that time I have an injury at my on my leg, and then I need to wait 1 or 2 weeks just to see the specialist there. So this is the thing that I don't want. So yeah. When my friend told me about the benefit on getting a personal medical insurance, I can get a treatment at a private hospital in case anything happens. Straight away I said, okay, this is it. All right. Okay, so yeah.
So done with our sharing. Editor, is there any question now? Not yet, Okay, please help us to like, share, and follow us. Both of us,
Yeah.
And then share with people that you think that they will be interested in this. And then ask us questions. Please help us to engage below. Or even just saying hello, we will greet you back. Okay? So we will go to our first topic. From both of our sharing, you can see that I actually started my first insurance, way later. I only started it, I think, few years after I started working. So the first topic is why waiting too long could cost you more later. So this is usually suitable for people who are very early in their 20s or mid-20s. Because it is the best time to buy insurance as the premium is the lowest and the health conditions are very, very healthy for most of the people. You see, premium rise with age, one thing. And the longer you wait, the higher you have to, the higher the monthly cost became. And if you look up to a total lifetime value, the amount that you have to put in your lifetime, it's actually bigger already. And second thing is that health condition. What if now you are healthy? Later on, if you are not healthy already, there are three possibilities. First, you might not be able to get insurance anymore. Second, you may be able to get it, but you might have exclusion or loading. Or you will be able to get it, but you have exclusion and loading in the same time, which is not something that we want. But if you have that condition already, then you have no choice. So buying early give you the most choice. You are free to choose from any of the company because you are healthy, and then you will start with a much lower premium. And in long run, you will actually pay lesser. And another thing, early start, it gives you compounding effect. If the policy that you buy is an investment-linked policy or a policy that has a cash value or a cash bonus inside, then it will have much more time to roll by the time that you wanted to withdraw the money from the policy.
Okay, so but you mean that the compounding effect, right? Does it mean at the same time, if let's say if investment-linked policy, if I started my insurance planning with an investment-linked policy, when I upgrade it, right, when I wanted to upgrade, right, will I have a cheaper premium compared to I buy a new one?
It depends how the policy has been designed. If let's say in the early stage, the way you and your agent design that, you actually put in a little bit more extra inside. And by the time you upgrade your policy, the same policy that you wanted to upgrade to have more protection inside, most likely you don't have to increase your price.
Yes.
And because early on you have more in already. It roll over, and then with the compounding effect, you have more cash value. And then when you top up the protection, but this one have to calculate. This one is a bit specific already. But there is a bigger chance that when you upgrade it, because you started way earlier, you don't have to increase the premium.
Okay.
Or you can decide not to upgrade it, but at the end, your cash value is going to grow out more.
Yeah. So just a little bit top up on your answer, Seph, because recently I just did a policy review for one of my clients, which one of my brothers lah. Right. He's looking for to do additional top up on his coverage, and then buy a policy for his son. All right. So we are looking through a few options for him. I say, you know what? You can actually looking into a new coverage here. Is an additional top up on your current existing one, and then at the same time you can also top up on your current existing policy. You can also top up on your current existing policy, and then so we did a comparison. And then it can be cheaper. It can be cheaper by topping out on the existing policy, because how I'm going to say this is, it's something like, okay, let's say today your policy, you started off with 180,000 life, 180,000 critical illness coverage, right? At the end of the day, you want to top up you want to make your coverage become, let's say 300,000, all right? So if I sell a 300,000 policy, another 300,000 policy to you, the cost is higher. All right. But when I do the calculations, like topping up on his current existing one, it's actually way more cheaper. I just tell him, you see, you look at this 180,000, right? I just add on another extra 180,000 on your current one. It still become 300 over 1,000, about 360. You'll become 360,000. So the premium is cheaper, and then you get the coverage that you want. And then the good news is, when I top up on this, right, and then I just adjusted your premium, your policy actually sustain longer. It's actually sustain longer. You say, why? I say, because one thing is the mechanism of the investment link policy. It's compounding with the cash value and everything, and then it with the cross support to the cost of insurance, it's going to sustain your policy way longer, until 80, 90, 100. There's no problem on that. All right? So when we talk about planning at the early 20s, the life stages when you are just about to graduate, or you are still in college and looking in like you're just starting your life in other stages of life, all right? I always looking at telling my client that you look at responsibility. When I talk about responsibility at this stage, right, it's not about responsibility to the family. It's not about responsibility to the people around you, but the responsibility to yourself as a young adult. And then what is your most concern? So, of course, the first thing they are looking at is, actually, I'm very worried of my medical bill. I say, why? Because if I get sick, how? Then I will always come up with a question, you got company coverage? No, I'm still new in the job, all right? I haven't confirmed yet, so got no coverage at the moment. So I need something to back me up. I say, all right, number one, you're looking into medical bill, medical expenses. Number two is your lifestyle and living expenses, all right? At the early 20s, right, you always like to I want to have this, I want to have that, I want to buy a new car or something like that. So these are all expenses. But if something happens, right, then we have to come up with our own pocket money. It's going to definitely affect our lifestyle and living expenses, although it's for a short term, maybe 2 or 3 months. But it does bring in the stress. It does bring the stress. And we ourselves, we know that we don't have enough emergency funds. I always tell my client, how much can you save as a fresh graduate? How much you can save, right? With the rental coming with bills to pay, you actually unable to save much unless your basic salary that time is way up the market value. Right? So the only solution for a problem at this currently is through insurance. Is to buying a good insurance plan. They're going to help you in the time of emergency. All right? So I will always, then the next question they will ask me is, so which plan should I get? Which plan should I get? I say, we're looking at, I will always propose that, so I'm looking forward that you look into something more sustainable for your first coverage. Sustainable and affordable, of course. All right. Your budget is very important, but a comprehensive coverage, right, is something that you can really work around with for the next 3 years. For the next 3 years. So comes the next question is, as a person at the earliest 20s, should you buy an investment link or a traditional coverage? So what is your opinion?
When it comes to investment link versus traditional, it really depends your current situation. If you ask me, investment link often has much more benefit as compared to traditional, but traditional is much budget friendly. So usually what I do is that I will actually draw out a line in the middle of the paper. Then I will sum up the benefit of each side, the investment link and then the traditional, and then the price at the end. So I will check with her or him, saying that, oh, okay, look, based on your budget right now, which is much more comfortable for you? Are you able to go for the investment link? Because look at all the benefit that the investment link has as compared to the traditional one. But it really depends case to case. So usually what happens is that either if the customer has allowed me to assess their financial situation, then I'll be able to tell them both sides and then I will give them my suggestion. Or if I'm still not fully understand their current situation, that is the time that I will check with them. Are you comfortable for me to, do a quick assess of your financial right now? How much you are earning, how much you are spending on where, what's your commitment. So it really depends. For usually in roadshow, I met a lot of fresh grads or people who work, like 1 to 5 years. Their financial situation is actually quite similar. True. So those are the time that the way I help them is I will try to design together with them, like they're just beside me. So I will design the policy according to their needs. Do you wanted to put more money into the critical illness in the investment link? If yes, then we add in how much is going to increase your policy. If no, how much you can save on the policy if your first priority is the medical. So it really depends. I like to do this because it's like me and client, we are doing this together.
Yeah, I think that is very important that you have someone that knows about insurance or Takafu to plan alongside with you. It's not that, asking my friend how to do this, how to do that. Because at the end of the day, right, your friend doesn't really have the responsibility for the decision that you made, right? And then the responsibility is focused on your shoulder and the agent's shoulder to, because the agent has to make sure that this is really something that you want, something that you need. Something that you need and you want is the most important. So it can give you reassurance. And then if for me, I will also do exactly the same thing like you did, like investment link or traditional. But let's say if their budget unable to fulfill investment link policy, they can always start up with something that is traditional, which is much more cheaper. This is I mentioned about. This is more focused on the medical insurance. But if they wanted something to be more comprehensive, perhaps we can mix around, because I think nowadays, right, if you're looking into critical illness coverage, you're looking into accidental coverage, it's actually quite affordable, quite cheap. It's like 50, 60, 70 ringgit, then you can get per month. You can get a very good coverage as a student, even as a student, because like been mentioned just now, why in roadshow we approach student and then student buy. Because one thing is because students nowadays, they realize, okay, I have loans to pay. Belum keluar kerja sudah hutang. So that's not a really good thing, but what to do? Education is a cost, and then we need the money to study anyway. But the thing is, they have most of the students we met, they have the urgency, and then some of the students that we met, they're actually working part-time and then traveling using motorbike. So accidental prone. So they know the importance. Right. So if for me, usually I will mix it around between investment link and traditional coverage. And then they will look at a much more comfortable budget. So if I have two options come together, they still can choose either one according to their priority. So just let me share with you a case that my experience when I closed a student during our roadshow actually. So he actually come to our booth. For 2 days. So the first day he came, he just stopped by and then he asked me, I want to know more about insurance and Takafu. So I explained to him, and then he said, "Oh, okay." Then he walked off without taking any free gift from me.
Oh.
Yeah, I was like, okay lah, never mind lah, student, right? So it's okay. They want to know, okay, we share, right? So that's what we do in the first place. And then I give him my name card, and then he also give me his number. So I save his number. So without any expectation that, he will call me back or whatever. But I still drop him a message at the end. I say, thank you for your time. Thank you for giving me the opportunity to share with you. So I hope that my sharing can help you. So in future, if you will know how to really plan for your coverage and protection. Then the second day, he texts me whether am I at the booth or not. So he came back. The first question he asked me is, can you explain to me again how this insurance really work? Right. Then the second question, can I as a student buy a medical insurance policy or a saving policy? I said can, but let me calculate for you first. But you should tell me your budget first. All right, student can buy as long as as long you're willing to pay. You want to get yourself covered. You want to work on a premium. We can work on a premium for you. So it's a series of fact finding. Is actually at first he really insisted to having a saving. He insisted on having a saving first in the first hand. Then I look at him. I say, if anything happens, right, you cannot take out the money from this saving to actually help you to pay the bill, right? But you have an option. You can go to government hospital. He told me, no, I won't be going to government hospital because the waiting time is too long. So then you should look into a medical insurance, medical coverage and an accidental coverage. Then he was like, okay, then, but can I do both at the same time? He said, can I do both at the same time? He said, okay, can. So we work around the budget. And then our fact find, actually he got extra money. So the interesting about his extra money, right, is an inheritance lah, actually.
Oh.
Yeah, it's an inheritance. So I said, yeah, just take out a bit of this money and then pay for the policy. Yeah, then he was like, oh, okay, I can do that. So that's how I secure his protection. All right. So yeah, okay. So when we are looking from this case, right, is looking at the priority and the budget. All right. So yeah, your priority is you want to save money. I mean, young people nowadays, right, they really want to save money because they know it's very, very hard to save. But for us, from our point of view, the fundamental is always you get your protection right first. Then you will be able to work alongside to get more money in. Then you can save. All right. So yeah. Okay. So yeah. So for the viewers, all right, please help us to like, comment, and share this live, all right, from the Facebook. And then I have some viewers on my TikTok as well. Currently running my TikTok live.
Wow.
Yeah. Some of my friends joined. Yes, I got Echa. Echa is my friend from my Touch Rugby team. We got Yao, Joseph. All right. Thank you all for watching this live. I hope this live can be beneficiary to all of you. All right. And most of them are still young adults and students, actually. All right. So from our viewers on Facebook, please do like, share, and comment. Ask us any question if you like. All right. And then, so if you have any doubts, all right, regarding your insurance coverage, all right, you can drop us a comment. All right. We can maybe run through with you a short review. All right, and yeah, so we can help you. so we can help you.
Just drop your question on the comment section so that we can actually respond to you. Editor, is there any questions now?
All
Not yet,
right.
huh? Okay.
Okay. Besides that, today at the show, we're going to share some good news to you. All right. The good news is for those loyal AIA customer. You've been in with AIA for more than 10 years, and then you have very, very old medical insurance. And at the same time, you realize that you cannot do any upgrade or you cannot buy a new policy. Okay, let me tell you, right now is the time. Right now is the time. Because why? We have this campaign, we call it guarantee issue offer. Means it's a guaranteed approval with no waiting period, with no contestable period, and then there's no medical underwriting, and then there's no medical report needed. So how do you know that you're going to entitle for this campaign? It's very simple. Just DM us your full name and your IC number. We can check your system, and if you're eligible, we will let you know, and then we will share more regarding the details to you. All right?
Even if you have diabetes, even if you have high blood pressure, heart disease, even a past history of a cancer, or you have done the angioplasty, for all these people, as long as you give us your IC, we check you receive the GIO, the guarantee issue offer, you'll be able to sign it up without medical underwriting, without financial underwriting. There will be no waiting period. There will be no 2 years contestable period. But of course, you get to choose lah. Because your old policy, it's only about 70,000, 100,000 per year. But the new one is going to help you to top up to 5 million, 8 million. The maximum you can go is actually 18 millions. So 18, yes, 18
Wow.
millions. And it's acceptable right away. So this is something very good. That's why we call it only once campaign, because AIA is good. Sorry. Because this company is going to do it once only. Okay. So we're going to go for our... one questions. Okay, editor, can you put it up? We have one questions now. Okay, hello Ho. As a parent, should I buy insurance for myself first or start with my kids' educational plan? Okay, I'll take this one.
Okay.
Meaning, right now you don't have any insurance coverage for the whole family, is it? Both father, mother, and the kids. So if it's that case, I would actually recommend for the breadwinner, or if it is a double salary family, right? I would actually recommend for two of this person to have medical protection first. That is the first step. And if you still have some budget, then you get a medical coverage for your children, because now they are very young. Now they will be able to have the insurance for much cheaper price, and then at least 3 of the members of the family, everybody has a medical plan. So if you have even more budget, then the next step you can go is maybe you wanted to protect the life insurance and critical illness insurance for both of the parents. And then we can continue to go and go and go. So if you ask me, the question is that whether I should buy insurance for myself first or to start my kids' educational plan, definitely get the protection for yourself first, because you are the breadwinner. If something were to happen to you that costs a lot of money, that you end up have to take out your savings, cash out your investment, that's going to be a disastrous for your family. So go for your protection for yourself first.
Okay, so yeah, I agree with that, because as a breadwinner, it's important that you get yourself covered. I always tell my clients that, you know what, as a parents, we don't want to miss out any important time during when our kids grow up. All right, when our children grow up, we don't want to miss any single time. But in case of throughout this process, throughout this journey, you have to get down from the bus halfway. All right. You have to stop halfway, and then they have to continue the journey alone. Insurance is something that very significant, that given them the assurance that daddy, mommy is still on your side and be with you. All right. So they know that their future is secure with the sufficient amount of money. All right. That is when, as a parent, that's no longer around. But let's say if a breadwinner unable to work anymore, all right, sufficient insurance coverage, right, is going to buy time for the family to actually come back from this situation, and then make a living, and then slightly make their life become better and better, so they can work around it with they don't need to rush through everything and make rush decision. They can slowly figure things out. All right, I need to plan it this way, and this way. Yeah. So get as parents, get yourself protected first. Then kids' education plans can come later. Actually, All right. Continue to you, Seph.
Okay, so for our next topic is don't let medical costs drains your saving. So this is usually suitable for people who are in the mid-20s to late 30s, meaning they started to have some savings already. So there was a time that they're working and currently they have a certain saving and they are actively building their career and most likely still single. So this is the time that medical coverage is critical here because career is growing and the saving are still building. And one hospital bill can just wipe it out. Like Malaysia, hospital bill in Malaysia can reach 6 figures easily, even for the common conditions. Medical inflation is real and it usually inflates much faster than our salary. So the last year, medical inflation is actually 14.9%. And most likely for our companies, for the salary workers, right, we usually increase 3 to 5% per year. 5% is like, when you're really performing. So last but not least is that insurance actually shield your saving. So while you're actively saving, you have an insurance to protect your saving so that when something happens, the insurance will help you to pay out the bill instead of you clearing up your savings to pay the bill. So I have this because like I did a quick share just now. One of my ex-colleague, but this one is a him lah. He was in another principal actually, so we were quite close back then when we are working because there's a common activities that we do after our work. And he was diagnosed with cancer at the age of 28. 28, 28 is very young. No one expect themselves to have a cancer at the age of 28. It's a colorectal cancer, stage 3 colorectal cancer. Once he was diagnosed, he is unable to work and he has to be hospitalized and also accept chemotherapy. So there was like this 9-10 months that he wouldn't be able to work. And he actually lost the job. Because I think the first few months he's still under the hospitalization leave. Then later on it's unpaid leave, and eventually the company has to ask him to go, and that really worsened the whole situation because he has no insurance. He's at his late 20s actually. He has no personal insurance and he was fully reliant on the company insurance to pay out the bill. And even so, it's about to reach the annual limit already provided by the company insurance. And that is the time that company decided to ask him to go. It's an MNC, so everything is follow the book. They follow they follow the book lah. So when an employee cannot work for a certain amount of time, they cannot justify the KPI for continuing hiring someone for not doing the job. So
Correct.
They are very sadly informed him. And it was the day that he called me and he cried in the phone. He has to continue his chemotherapy. And so what he eventually do is that he finish up his savings that he has built for the past, I think, 6 years of savings. He actually saved quite a lot of money. He can save one. He's someone who can save money, and he clear up his savings. He end up has to ask his parents some money so that he can continue the therapy and then to pay for his commitments. He recovered. His body is actually, because quite young, I guess, so he recovered after the whole chemotherapy and after that. But it took him quite some time to get back up on his own because he lost his saving. He owes his parents money. He even owed a few people's money. And it's not, he was a salesperson like me. And when you just finish treating, I mean, while you're still recovering from the cancer, it's not easy for you to work the way you used to work. He's constantly tired and lack of energy. So if during that time he has a policy that I bought previously, if he had the policy that I bought, his medical will be covered, so he doesn't have to clear up his saving. And second, because he was diagnosed with cancer, so the policy that I bought actually has critical illness, which is going to pay out 150,000. It's not a lot of money, yes, but that can solve a lot of problem, because 150,000, you can easily use that to pay for your money commitments.
Correct.
Yes. So if he has that policy during that time, he wouldn't be succumb to all this hardship, financial hardship, that he actually used up like 3 to 4 years to recover from it. I mean, we are still friends, so occasionally we still call each other and we still hang out and drink coffee. I don't drink alcohol. Okay, drink coffee. And he did told me that that incident makes him delay all his life stages because of the financial impact that he was taken from the incident. So he has to delay his wedding. He has to delay his home purchase. There's a lot of things he has to delay. And he actually actively asking me that during that coffee time, he said, is there any way that I can get insurance, any kind of insurance? But unfortunately, as a cancer survivor, which is also quite recent, it's very hard to help him to get any medical life or critical illness insurance. So the only insurance that can help him is that personal accident insurance, and that's all we can help. So, to circle it up, the purpose that I'm sharing this story is that don't let medical costs to drain your saving, because one bill, sometimes even just one bill, like not as serious as cancer, but one bill is going to clear up your saving. So if can, buy insurance as early as you can. Make sure that you have your medical cover. So that's the part that I'm going to that I shared. Moses?
All right. Regarding the case that you share regarding your close friend, I actually do have a few clients who are like that, when especially when they're dealing with cancer. They still have to work. They still have to work in order to move on, to move on with their life and whatever. And when I look into that, the only thing that myself telling myself is, the only question I ask is it my fault of not pushing hard enough to ask them to get better coverage at that time? But some of the client is, I met them after they was diagnosed. Then for me, it's like, actually you do have a choice. You do have a choice to just focus on recovery. All right, if you have a sufficient amount of money, So actually, this make me think of one thing is about human behavior. We got terms we call it FOMO, right? The fear of missing out. We likes to whatever the person have, I also want to have. Got new iPhone. The fella buy already, right? So okay, I must find a way to buy a new iPhone. But how many times, right? Do you know that the person like, hey, got new insurance coverage. He just upgrades his insurance coverage, right? I also want to upgrade. Okay, I cannot. I tak boleh kalah one. Mati tak boleh kalah.
Impossible to happen. Impossible to happen. No one hang out. Okay. Young people or below, people who below 40 years old, no one talk about insurance during your hangout one. You talk about anything. You talk about branded. You talk about phone. You talk about work. You talk about, you bitch about your boss, everything. But you will never talk about insurance. But guess what? When you are 50 something, 60 something, that is the time that when all those uncle aunties sit down, then they started asking each other, hey, how's your insurance? Are they still covering this? How much is the coverage? How much you are paying right now? Wow, now the price increased already. Because that is the time that they know they need it.
Yeah. So, I mean, I think even current in my social circle, right, we hardly talk about it. Of course, me doing my job, all right, we trying my very best, all right, to discuss about it from time to time. Of course, it felt a bit awkward at the time, but slowly it can become a habit. The reason I also don't understand why, because we have so much real life example in front of us. Today you scroll through Facebook, you see some video of people asking for donations through newspaper on Facebook, and then maybe people around us. Yet we still refrain ourselves from talking about this, right? We still refrain ourselves from talking about this. We did not review our policy often, all right? Like, Seph, do you review your own policy?
Before I became agent, I don't.
Okay.
But I do have a very simplified Excel that I forced my agent to do it for me.
Okay.
I was like, can you just help me to put in everything inside here so that it's very simplified, and then I can always check it back. Because for me to read the policy back then, before I learned insurance, before I became an insurance agent, it's so hectic. It's so many things I don't understand.
Yeah.
So I have this very small table of Excel where it's in my financial planning, my own personal financial planning. So I know for medical how much I was covered, how much I'm paying in a year in total, and if I pass away, how much my parents will receive, and if I was diagnosed with anything critical illness, how much I will be able to receive. I never changed that.
You never changed that.
I never changed that. And even when my agent approached me to review again, I would tell her that, I said, is there any changes? There's no changes, right? It's this, right? I would just copy the table and then I'll just send back to her in the WhatsApp. And she's like, yeah, it's like this. Then I lost the opportunity to upgrade my policy along the year, because every year, whenever she asked me whether or not to review my policy, I say no.
Yeah.
And I think she's not a very pushy type. So I lost the opportunity.
Okay. All right. So, yeah, to the audience out there, thank you for watching our live. All right. Hi from us from Gratitude here. I'm Moses, the insurance guys.
Hello.
And this is Seph from the Good People's team. And we are from Gratitude.
Yes.
All right. Thank you for spending your lovely evening with us watching our live. In case if you have any questions regarding your insurance policy, or you don't know how to actually plan for your insurance policy, all right, for your financial planning and protection, do drop.
Just leave a comment.
Just leave a
comment down below. Don't be shy.
Yeah, or you can WhatsApp us individually. All right. And then to my friends on TikTok, hi Kebe, hi Stella, hi Mifdal. Thank you for being with me. All right. I hope this show can benefit you all. All right. So yeah, talking about FOMO and then refrain ourselves from reviewing our policy. All right. Yeah, it's like you mentioned, like what you said just now.
We will never.
Agent not pushy.
Yes.
And then you also don't push yourself. All right. And then you don't show off to people. Hey, you know what? I got this. I got that. All right. So, but I think there's something that should be discussed openly. So it creates urgency. It creates awareness. All right. Because a lot of time, by the time we wanted to get covered, right, it might be too late. Or maybe we still can, but at a much more higher price.
Yeah.
Because it's not just exclusion and decline application in insurance policy. In insurance, there's also loading, which they might need to pay extra 20-30%, some even 100%. Means double. Everything goes double, right? So we should have the awareness by managing our risk properly. I do review my own policy.
Back then, before you become agent.
No, when I become agent.
That's different. That one I review my own also.
Yeah, because before I became agent, I only know medical coverage lah. Right? Everything pao ka liao lah. The hospital bill, everything cover lah. The rest actually I don't know one. Yeah. So, but throughout the times I learn. When I became agent, 2 years later, I started to review my own life coverage and my critical illness coverage and my medical coverage. And I will be very frank with you. Today, my life coverage is about 500,000. Yeah.
That's not enough.
I know. So this year is going to top up some more. But my critical illness coverage is more than my life coverage. The reason why, because I found that my priority currently is on critical illness more. Because my life coverage is still okay, 500K. But I can top up that slowly. But I will more emphasize on my critical illness first. Right? Because my priority is different. My priority is different. All right? So, yeah, because when the question that I always ask myself when I'm doing financial protection planning is, what if? What if this happened? How much I need? So I was looking at my income. I was looking at my commitments. I was looking at my expenses. And yeah, then I work it through. I cannot run through a very complicated financial planning, analysis kind of thing, because I'm very not good at maths.
You can use Formula One. I can share with you my Excel.
You know, the formula, right, for me is like 1,000 worms, like I cannot. So I just run a simple kind of 加减乘除, alright, tambah tolak darab bagi, alright, simple, alright. Don't need to headache. Yeah, don't need to headache. Alright. So, and then I always tell myself that and I always tell my clients the same thing also. The best time to start, right, was yesterday. But the next best is always today. You should always start now. Start now, not necessarily like you must buy now. We review first. You review a policy first. You look into the protection gap. I always focus on the protection gap and what is your priority. So if you have a protection gap in income protection, then we will work on that. If you're talking about creating legacy or something that can be passed down to the next generation, you're more focused on that. Your priority is that currently. Then we will work on that. It's not necessarily once I review, I have to top out everything at the same time, because budget, it's all about money. It's all about money. All right. And then, yeah, like you mentioned just now, the thing is, like the case about your friend who have a cancer, his saving basically gone.
Gone. And he makes some. His saving basically gone. He has to borrow money from a parent, from some friend, and I'm not sure whether he has any personal loan from there. But he did take quite a long time to recover from that. Yeah.
So you see, I having the same experience right in front of my eye when during 2022, when I was doing my physiotherapy in a hospital, because I was badly injured that time. These young couples, I think in the mid-30s, somehow about my age. The husband actually got stroke.
Oh no.
Yes, and then was doing rehab that time. The wife was sitting there working, still working, accompanying the husband doing the recovery. So what I did is kepo lah, go and ask, hey, what happened? Although I know what happened. So, but the wife is very friendly and kind enough to share. He's having a stroke. And then, I say, how about the cost? And I'm being very straightforward that time, because he's a stranger so I also don't know how to say, so how about the costing? He said, actually at first we have a company coverage but after that now no longer working, then now use the personal one. Okay, I say, okay, so but the personal one, the limit is
very small, is it?
Very small, very little. So he say, slowly seeing the amount getting
depleting.
He said, do the husband have a critical illness coverage? The husband have critical illness. She said, yes, but not much. The moment when I heard not much, right, I know that it could be less than 100,000. Yeah. If at 200, 300,000 it still can be quite comfortable, right? So when I looking at this moment, right, looking at this couple,
Okay.
the option
One
is
thing
limited.
I want to pause you for a while.
Yeah.
Because I realized that we did not say hi enough to to
Oh,
our
is it?
audience here. So hi people. Thank you so much for dropping
Hello.
by. Please like, comment, and share so that more people will be able to see our live show. And hello, Melissa. Hello. Thank you for calling us handsome.
Hi, King.
Hello, King. So if you have any comment or if you have any questions, do drop down below so that we can respond to you. Hello, Mandy.
Hi, Mandy. Sudah makan, Mandy?
Actually, we haven't eaten. I'm actually quite hungry.
Is it?
Yes.
I should go for supper later.
Okay.
Alright.
Editor, is there any more? Yeah, we can take
You can
questions.
post out the question.
Okay, you pause on your story.
Alright.
Like,
Okay, from Ho Cheng Seng. Is it better to buy a small policy now or wait until I can afford a bigger one? I can take this question. All right. From like at the early of the show, I did mention when it comes to financial planning, protection planning, it should be something that is sustainable and affordable at the same time. Sustainable means that the policy can last long enough, and then at the same time, at this stage, it is affordable to you. So there's no problem in buying a small policy now and then gradually working it along the way, upgrade it along the way. As long as you are healthy and then you have the financial ability to top up a little bit more. Like every 1 year, every 2 years, you do a review. That's why I say you should not refrain ourselves from talking about insurance coverage with our friends. And when your agent come and ask you yam cha, right? Agent come and ask you yam cha, right? Don't say not free lah. Yam cha is free one ma. So sure got free time one. Correct. So at that time for the review, you can do a short review lah. You can do a short review
and
then,
it's totally okay to say no.
yeah, it's totally okay to say no. Just say no, not at this moment. Not at this moment. Then the agent will say, if not now, then when?
Okay.
All right.
I think to top out on this, right? The way I do mine is that I will be a bit pushy when it comes to my client. I will say that, okay, I'm a bit pushy when I wanted to see them.
Yeah.
But I won't be pushy at all when I'm proposing.
True.
So because there's a lot of factors. One, like I wanted to see you so that I make sure that you are aware of the gap that you have, the protection gap that you have. But after I propose already, then you say no. It could be a lot of reason. One, it could be not the right timing. It could be now you wanted to save your money for some other thing.
Yeah.
Or you just don't agree that you need that protection at this moment of the time. So it's okay. But my job is to make sure that you are aware and you make that informed decision.
Correct.
And then actually, when it comes to small policy, I have a lot of small policy.
True.
Because my income increased slowly, ma. And my critical illness coverage is about 2.4 or 2.35 million. It has 7 policy that stack up to it.
Oh.
So I started my first policy when I was 24, if I'm not mistaken. And then later on, after I became agent, that's where I started my second policy, third, fourth, fifth, seventh. And some of it is very small one.
Yeah.
Because at the time I have a income bump. I was like, okay, I have more money. I have some budget to buy insurance already. Then I say, okay lah. Then I put into life and critical illness. That's the time I buy one small policy. Then later on, I stack up another one. So it's totally fine to buy small policy.
Yeah,
and
true.
there is a benefit in doing that. Do you want to tell the benefit?
What's the benefit?
Okay. The benefit is that at the age of 25, my premium is locked at the age of 25.
Oh, true.
26, 27,
Yeah.
29, 30, 31. And then each of this policy, their price are different one,
Yeah.
Okay, the way I calculate is that I take the total sum insured, meaning the total protection. I divide by the premium I pay. Then I get the rate. So I can see one clearly the rate is much higher when I was younger.
Yeah.
Meaning the protection, the leverage I have was much better when when the policy I bought younger. As I age over the time, the leverage diminished a little bit. So small policy got benefit on.
Yes. I also have a lot of small policy. Yeah. like because what I do, my calculation is based on the gap that I have. So I don't one lump sum. I going okay. Currently you need 500,000. So I straight away top up 500,000. No, I was like, okay, how many shortfall I have to get extra 500k. So okay, so this will be it. So my budget is there. So it's actually very comfortable in buying small policy and top up a little by little. So let's say if next year I have a huge income jump, then I buy a bigger one, no problem one ma. Right. So the thing is, when you constantly review your policy and then doing and then upgrade from time to time, all right, you're actually giving yourself a choice when things happen, right? Like the couple I mentioned just now, when things happen, right, they have a very limited choice. And then I see they're struggling financially. If let's say the person have a comfortable, let's say half a million CI coverage, when things happen, right, they can comfortably, okay, I don't need to work so hard for now. 500,000 can somehow, I can manage it for these 2 or 3 years to focus on recovery, at the same time buying some time for me to work things out to be better. All right. So for me, that insurance coverage might not be a lifetime solution for your problem, but it allows us to buy some time to recover and work on an exit strategy and how we can make things better after this. The money can actually help you to stretch the time a little bit longer.
Yes.
Stretch the time a little bit longer.
And it put you at ease.
Yeah. So buying a small policy, okay man.
No problem. We actually encourage that.
Yeah. Top out a little bit, stretch the time a little bit longer and longer. And then, and then one thing is, today I buy at age 35, let's say. Then my premium is locked in at age 35. Then it wouldn't like next year 36, right? I have to pay more for this policy that I buy currently. No, it doesn't work that way. Right? But let's say next year you want to top up. So let's say your gap become a bit little. Then you're still paying a very affordable premium. So top up little by little. No problem.
Okay,
right?
So to sum it all up, yes, it is better to buy small policy over a period of time. You can stack up on the smaller policy. The reason is being, when you buy small policy over the time, the earlier one is going to be much cheaper as compared to the later one. And then while doing this, you are constantly reviewing your insurance coverage, which is very good. You are very aware of your protection gap. Okay, editor, is there any next question? Okay, can you put it up? Hello, Eugene. Okay, the question is, when is the best timing to start planning retirement fund, or should we focus on the heavy protection policies? Okay, these two things is totally different aspect. So I think you were asking this question because you have a limited budget. Okay, if you ask me, if you ask me whether to start planning your retirement fund early on or to have a heavy protection policy, you should do your protection first, because when you have enough protection over the during now all the way until you retire, you do not have to worry about what if something happened during the time. But you also cannot only go for the protection. You have to allocate a certain amount of money to plan for your retirement. You cannot choose one and then totally ignore the other. So it really depends your current situation. I have to do a much more deeper assess with you. Only then I can give you a firmer recommendation. But if let's say you are 25 years old and then you have some savings, so you're at the point of time where you already have a medical plan, but you don't have any other insurance plan. In that case, I would actually recommend you to protect your income. I would actually recommend you to, hey, you know what? Everything actually comes from your income. So protect your income, protect your ability to work. And let's say another scenario, you are already at, say, 35 years old, and you have enough medical, you have some critical illness, you have some life insurance. So that is an entirely different situation and you are already 35. So that is a good time for you to actually look into your retirement fund. Other than EPF, do you have any PRS? Do you have any other vehicle that help you to build the fund and compound over the time so that during your retirement, you actually have more fund. You have sufficient and more than sufficient fund at the end of the year. So, Eugene, to sum it all up, I can't really tell you which to focus on, but if you ask me the priority, when you started planning, protection is always the first to go because that is the one that you mitigate your risk away from you. And then retirement, it's sort of like a saving. It comes later than after you mitigate your risk.
Yeah.
But you cannot just do one and ignore the other. You have to do both. It's just different allocation, different percentage. I hope this answers your question, Eugene.
Okay, any more questions from the viewers?
Yes.
How should we plan out our insurance for single men? All right, question from Brendan. Okay, I think I'll take this one. All right, for single men, how you should plan? I think at the earlier of the show, I did mention it's about responsibility. Responsibility is not, as a single man, responsibility is not looking at your family first, all right, but looking at yourself. Okay, responsibility for yourself. So if you plan accordingly, number one, the medical come first, and then income protection. Okay, for me, death maybe come slightly later. Why? Number one, in case of sickness, who going to take care? All right, is there any people around us to take care of us? No, not really. All right. The reality is when you have the money, people will come and take care of you. And if you don't have the money, sorry, right?
Yeah, no need people also got medical institute to take care of you.
But
If you got money.
Yeah,
If
still need
you
money.
got money.
Right.
That's why money is very important.
Money is very important. So as a single man, plan critical illness, critical illness and medical first.
Yes.
Of course, life can later or maybe not at this because permanent disability is something that we're looking at. I'll give you an example. A few years back, I did a claim. It's a TBD claim. The client went blind.
Oh no.
Yeah, because of stroke and blind. But of course, there's another condition causing the blindness as well. He has a CI coverage, not much, 50K, 50,000. But because his stroke is not the serious.
It does not fulfill the.
It doesn't fulfill the criteria of the stroke. So I cannot claim the CI.
Yeah, in a common term, they sometimes call it a minor stroke.
Yeah, minor stroke.
In Chinese, it's called 小中风.
对.
This kind of 小中风 is the one that put people at a very bad situation because your critical illness is not as bad as it fulfills all the criteria for critical illness. Then you cannot claim the critical illness.
True. So the only thing I can work out is, okay, when I saw the report and everything, I say, I can claim the TBD for you, permanent disability, because of the blindness. All right, got money ma, right? But the thing is, not enough. 50K. As a single man working here, because he's not from KL actually, he's from other state. He's a single man working here. Of course, he got siblings around him. The moment the claim pay out, right? The thing is the reaction from the family member. The 50,000, of course, 50,000 bank into his account, but I still meet them up and then showing them the statement and everything. The one thing the brother told me, right, is 50,000 only. I was like, yeah, it's 50,000 only. This is how much it buy lah. Yeah, so we can only pay out this, of course, with the cash value and whatever. Then the brother tell me, 50,000, do you expect me to see him every day, to pick him up, to send him to hospital for follow-ups, and then come back and then feed him with 50,000?
This is very bad.
Yeah, it's very, very bad. and then in front of that,
In front of your client.
yeah, in front of my client some more. So, I'm just a person who services a policy. I'm not the one who's selling it. But that time I was like, I'm speechless lah. As a single man, the truth is this is how it's going to end up. If you left yourself without any coverage, without a sufficient coverage. So for single men, it's critical illness and medical. Why? And there's another reason. My boss always tell me, single men try to do a lot of funny things on. Yeah. So they smoke and drink a lot. Like no tomorrow. Yeah. For not all, okay? Yeah, but
a good sum of them.
So focus on the income protection and medical. That's the thing. That's the focus. That's the priority. Right? Okay, Seph.
Okay.
Back to
Editor, is there any question? Okay, Melissa, she's asking, at the age of 35, how often should we review our policy and how much should we need? Okay, how much should we need this one? It's depending of your current financial state. So this one, I can help you to work it out. You maybe you can DM me or you can just text me in the WhatsApp. But that require me to understand a few of your financial situation, like how much you are earning, how much you are spending, your commitment and everything. But your first questions, at the age of 35, how often should we review our policy? For this one, we recommend do it at least once a year. Get your agent or get me, text me, my number is here, or DM me, so that I can help you to assess your current policy, how much you were protected, what is your protection gap, and whether or not which are the aspects that you should focus on. But it is our recommendation. And then after you hear us out already, then you can decide whether or not you wanted to proceed anything, or you just, never mind lah. This year I decided not to proceed anything because maybe I have some other planning, maybe next year. So you do it on a yearly basis. At least you are always, how would I say it? At least you are constantly aware, or at least one time of a year that you are aware that, this is my protection gap. This is for this one. I buy this insurance for all these purposes. At least you know. So to sum it up, once a year, even and I would say that at any age lah. At any age, I would recommend just do at least once a year for policy review. Or at the moment that you have some life stages changes, say lah, you suddenly decided to marry someone, or if you have someone that suddenly require your financial support, and you know that it's going to long term. So this is a life stages change already. You are financially supporting someone. So you might need a life insurance to cover for that. If something were to happen to you, then there is a sum of money to support this person, so that they will have more time to react to it. So to sum it all up, once a year to do a review, and whether how much you should need, then I really have to look into your financial situation. Only then I can do the proper and better recommendation.
Okay.
Is there any more question? Okay.
Right.
So before we proceed, let's watch some of our sponsor, their advertisement. Thank you, Menke.
All right. Thank you. Thank you, Menke, for become part of our sponsor.
Yes.
Right. Menke is
The lala is very good.
Yes, and I think we always eat there, right?
Quite often,
Quite
but for
often.
me, I'm not that often actually.
Yeah. I think quite often.
I do it like maybe once a month.
Oh, all right. So, Menke is our sponsor, is our partner. And their restaurant is located at Oakland Road, just opposite Scott Garden. Is it opposite or beside?
Nearby lah, I know
Nearby
it's
lah.
nearby. I would drop by for their steamed lala.
Yeah.
I would drop by for their fish actually.
Yeah, I always drop by for their fish. All right. Menke has been our partner for very long. All right, for very long, and then it's our go-to place lah. Actually, if we want, sometimes we bring our clients there for meal as well.
Yes.
Yeah. So serve really good food. All right. So thank you again, Menke.
Thank you,
for
Menke.
being our partner for so long. All right. Okay. So Seph, let's move on to the next topic.
Okay, next topic is why insurance. Why insurance isn't just protection, it is part of your financial plan. You see, a lot of people, especially younger people nowadays, they are very hypercharged when it comes to investment.
Yeah.
Very hypercharged. I have seen someone that I met in the roadshow when I checked with them, oh, you save a lot of money. Where do you put these savings to? And then they told me that they put into stash away, which is like a mutual fund kind of thing.
Yeah.
And none actually go to his bank, So he received the money in his bank account. And then after he budget out the money that he's going to spend, every single dollar he's going to put into the stash away. Then he told me that, because this is a very low risk, it has, it's very easy to take out the money. But when it comes to financial planning, that is not something that we recommend. So you have to start from the foundation. First is to mitigate your risk. Make sure that you done mitigating your risk already. Then you start saving up for your emergency and contingency fund. Once you fulfill all those, only then you march into investment. And usually you started your investment from the low risk. Lower return, yes, but lower risk first. You familiarize yourself more into that first, only then you slowly move up. And insurance is something that it complements your wealth building. It is the most foundation and the most important foundation cornerstone that when you are building your financial goals. Also, it completes your financial puzzle. Alongside with savings and investment, insurance ensure the stability. It actually gives you a lot more stability because you mitigated your risk away already. And it acts as a safety net for wealth building, protects asset if illness or accident strike. Sorry. Okay, it protects the asset if illness or accident strike, whether it is temporarily or permanently, say like for a disability. And it helps you to plan better long-term goals, from buying a property to funding a children's education. Okay, one of the cases that I can share is that I actually met this person in a roadshow very early on when I joined here. I think I met him in 2023, if I'm not wrong, at the end of 2023. We became very close over the time because whenever he has some problem, he will check with me. And then I've been helping him to do a yearly policy review. Although I did not help him, I did not sell that policy to him. But since he's okay with me, then whenever I text him and say, hey, it's about time to review your policy already. Then he said, oh yeah, sure. Then I will review again. Then I ask, oh, do you buy any new protection? Then he said no. Then we will talk from there. So he's the one that put all his money in the stash away. And there was a time that the stash away, because inside there are a few options for the investment, the option that he went for has taken a dent.
Yeah.
Has taken a dent. It's not a lot, but the performance is not as good as the market expected. And it was the time that he needed money, which is quite bad because he has no choice to cash out from the stash away and to make the loss.
Okay.
And he has no other option because he really needed that money. So make sure that insurance is part of your protection.
Correct.
when you plan your financial, because you will never know when the inevitable happens. And what happened to him is that he only has personal accident insurance, and he has quite a bad he has quite a bad I'm not sure whether I'm okay to share this, but he has quite a big hospital bill that he need to pay up to lah, and he has no choice to take up the money from there. That force him to make some losses from there. So if it's possible, I would, but I can't reverse the time. Like if I were to push him harder on the medical plan, because for every time I review the policy with him, I say, hey, you only have a personal accident. Do you want to look into a medical one? If you want to budget, then you maybe go for the traditional one, which is like about 100-ish per month. But he will tell me that he's a bit tight. He has a goal that he wanted to achieve financially. So he wanted his saving to reach a certain amount by the age of when like that. That's why he's focusing a lot on saving. But he thinks that personal accident is sufficient to cover him. But he faced an issue where personal accident is not covering, but he require to have quite a big amount that he has no choice. He really have no choice but to cash out during the time, which he make more losses, and that also wipe out his savings. So to sum it all up, when you're planning your financial, insurance is a very important tool, and it's usually the foundation that you should start with. Once you have done that, once you have somewhat sufficient insurance coverage, only then you move to the next level.
Yeah, correct. Because Seth, from what you shared just now, I can come up with a conclusion that actually young working adults, right, they can be very underinsured. They can be very underinsured because why? They're all looking at investment. There's nothing wrong with investment, actually. There's nothing wrong. We are not against investment. But we have to know that one thing, that no matter how investment, it comes with a risk. What rather is low risk, medium risk, or high risk, right? So the thing is, like when emergency happens, then you need to cash out the money.
Yes.
And then the things is, your investment went down, so you have to take the loss. In the end, is the money sufficient or not? No, not really. It's not really sufficient. So by planning it correctly, right, you won't have the problem with budget, and then you can still secure your investment, still secure your assets, right? Still secure your assets, and then at the same time, just with a little bit amount of money, you can get yourself covered well. It's the same thing. Insurance is something like today you pay, you're giving insurance company, you're giving this person RM1, and then this Taiko actually tell you give me RM1 every month. Anything happen, give you RM10 or RM100. It's something like that. You are leveraging it. Because at the end of the day, right, everything is about money. I think it comes to one thing it's a habit the habit of doing budget and financial planning, and then sometimes we didn't get our priority right. We didn't get our fundamental right at the time. The second thing that human being, right, most of us are very bad at assessing our risk. We can be too optimistic. There's no what if I cannot make it, man. It's like I can do it, man. Nothing will happen, man. Sure can, man.
I'm the lucky one.
Confirm boleh, man. Janji boleh. Tak ada masalah. Boleh je. Tak ada. Okay, boleh. Tak mati pun, kan? So this is the mindset, right, that cause us to make, not say wrong decision, not so good decision. So, especially in giving ourselves secured financially. Secured financially, right, it doesn't just mean that I earn a lot from investment. But secure financially means that if something happens, right, I have the ability to come up with the money that which I not suffer at loss, but I still can come up with the money to actually pay the bills and everything. All right. The third thing is sometimes we avoid making decisions and sticking with the easiest one. All right. So this is what I thought. This is what I'm looking into when the person tell me that I have a company. I have a company employee benefit coverage. But one thing, we realize that like the few cases that we shared just now, after a few months, right, company have to let you go. Because why? You're no longer productive, you're no longer bringing benefit to the company. So is this the easiest option? Yes, at the beginning it is. But the next step is to make a decision personally whether that it is enough or not. It is enough or not. So it comes to a point that we think that insurance is something that you get when you are financially comfortable and ready.
Oh, come on. No one is going to be
no.
financially comfortable.
Yeah.
When I was earning 3,000, I spent about like 2,000 something. Now, I still spend about like 80% of my income.
Yeah.
Because as you earn more, your lifestyle inflated, you started to have more commitment, you will never be comfortable. But you will
Yes.
always have to instill that habit of buying insurance since you're very early in your career, so that you have that habit to carry around.
True. So it comes like what you can do is, if you are not financially comfortable to get a huge amount of coverage right now,
Start small.
yeah, start small, right? Like what we advised Mr. Ho just now. Just start from something small, step by step. We'll work it through along the way. Your income will grow. You will be much more, you have more financial ability to actually getting yourself a comfortable life, getting yourself a comfortable protection coverage as well. So it's not, a lot of young people, they think that it's an extra expenses. Sorry, it might look as an extra expenses now, but if thing happen without these small little extra expenses on the insurance coverage, right, the expense is going to be huge when things happen. When things happen, hospital bills is no joke. The employee benefit, right? How many of us have really studied the employee benefits the company have given? Actually, not much. Actually, even a simple surgery, the employee benefit
Can be
annual
gone
limit can be gone one. Can be gone one. And then a lot of people out there that doesn't realize it. That's why it comes to a point that young people, young working adults, right, can be really underinsured. Because
especially now.
yeah, yes, important to invest because you want to get more money. I mean, investment in a good way. You are trying to get your retirement planning, start your retirement planning early. Try to live a comfortable life. You're planning for a long run, all right? Or there's a medium life goal that you want to achieve, like buying a house or something like that. Through investment, yes, you get fast money, but the fundamental must be right. The fundamental must be secure, right? So at this point, right, still I will go back to the same thing, emphasize the same thing, your commitment and responsibility. Taking care of yourself and the family, right, at the end of the day, is still all about money. It won't run away. It won't run away. So we must be more time sensitive. Like at this current stage of my life, all right, what is important? All right. Yes, investment is important, but at this point, what can I do? At this time, what can I do to actually secure the money in investment? Right. Investment at the end of the day is just dollar cost averaging. Right. So you beli, you kumpul. At the end of the day, oh yes, untung lagi untung, then after that untung again. So this is the money that I come up with. Right. But in case of anything happens, I don't want to use this money, man. I don't want to use this money. So be more time sensitive in protection and financial planning. Right? It's not about and then we have to learn one thing is stop looking at the present. Right? But also a future. At least 3 to 5 years down the road. Why? Because currently I'm having a career. I'm not saying like the career that I'm having right now, I'm going to work for this company for 1 year. No, you won't progress from there. 1 year, you won't achieve anything. But not say won't hardly, but at least for the next 3 to 5 years, I'm focused working on this company. My career is here. So what I'm going to achieve in these 3 to 5 years. What is my income? How my income going to increase in these 3 to 5 years? So from there, we can see, okay, the next 3 to 5 year future, and then what is the thing that's going to happen. The question is, what if things happen? So plan from there, and then you will have better, clearer vision. You have better budgeting. But let's say, just in case, if you still cannot see the picture, you can always WhatsApp me, the number in front of you, in front of the screen, or you can WhatsApp Seph, okay? DM us. We can help you to draw a picture. Very nice one. You want color? What color also we give? Okay? All right.
Okay.
So, yeah.
So when I hear just now, when I hear Moses talk about, wow, insurance is something extra, that light a little bit fire within me lah. Because I have heard this before from a roadshow, but because due to the prospect is in front of me, I tamed down myself. I was like, I see. But come on, you know what's extra? Buying $20 coffee is extra. You're earning 3,000, right? If you're earning 3,000, buying 20 ringgit Starbucks coffee is extra. Using iPhone 15 is extra. Getting that car is extra. But you're spending all this money, but not your insurance, not to protect yourself. Seriously, look into your financial. But okay, I tamed down a bit. Okay, sometimes in front of people I cannot do that, but in live show maybe I can show a bit of fire lah. Okay, so now tamed down already. We are going to please help us to like, share, and comment. This is the last 30 minutes already. So for today, our topic is talk about what are the insurance that's suitable for your different life stages. Help us to like, comment, and share. And if you have any questions, please drop at the comment section. Or if you're shy, you can comment. You can DM either me or Moses, or you can just WhatsApp us. This is our number. Okay. So the next topic is from me to we. Insurance when you start a family or when you have a long-term partner. So this usually at the age of about like 30 or 30 plus. It depends on your life stages lah. It could be someone that, they are very committed to each other, but they don't plan to marry, or they are already married. Or they already married, then started to have children already. So what happened to these stages is that they need to focus on protecting the dependent. So dependent does not only mean that someone that is fully rely on you. Someone partially rely on you is also considered as the dependent. So dependent, for example, such as children, which is fully rely on you. They can't earn money. Second is your partner. Although they are salaried, they have their own work, but they are also partially rely on you. Because both of your life is so intertwined, whether it's financially or, like you are staying together and everything. So you are each other's dependent. For life partners, like two people, they staying together, they plan their life, they plan their future together, but they might not have the plan to marry yet, or maybe not. Life insurance ensures the continuity to protect each other. So your loved one, your partner, aren't left struggling financially if the unexpected happens. So for example, 2-person share name buy a house because they are very committed already. They are like 5-6 years together. One left from an accident. Because they share the name buying the house, their loan also share. When one person... the mortgage wasn't shared. The house ownership is shared by 2%, but the mortgage was taken by 1%, taken by A, for example. And then when they bought the house, during those times, both A and B, they are sharing half and half for the mortgage repayment. But B passed away. But the loan is under A name, so the insurance that they were buying together with the mortgage loan is not covering B. So what happened is that A actually has to pay a full loan now, which really take a quite impact to him financially, because they're not buying they're buying more expensive houses. So that add up to his, I think it's like additional 2,000 plus to his monthly commitment. And he did struggle. So when it comes to life partners, right, especially you started to buy house, you started to have more financial intertwines, it is always very advisable to inform your agents, or if you don't have one that is very active, you can look for me or Moses. Our phone number is here. you let us know you have a life partner that you started to plan your future together. You have some financial intertwines, or you buy property together. That we can recommend you. We can actually look into that and recommend you different insurance to protect each of you. And the other group is that new responsibility. Like a family that started to have a first children. So there is a new risk already. Oh, you wanted to protect your children. And then you also look more into, because now they are fully rely on your income. And the other group is, if let's say you already have a kids, do you wanted, if your budget allows you, do you wanted to start planning for their education? So that is also something that you need to look into it to help fund the future educational costs, as the educational cost is increasing over the time. Sorry, I lost the line. Okay, Moses, pass to you.
All right. So, like what you mentioned just now, Seph, is like talking about from me to we, right? It still came back to the keywords that I mentioned: commitment and responsibility.
Yes.
Because it's a long-term commitment. All right. So, yeah, but the thing is, from the financial, from the protection side, right? How can we really do that? And then, to be honest with you, maybe there's a lot out there. There's a lot of people out there that they are running away from these questions because it's somehow it's a huge decision.
And can be quite overwhelming.
Can be quite overwhelming. True, because I understand the struggles of young families when it comes to financial protection. Truly, because my circles are mostly young families. Yeah, and then I know with the cost of living nowadays, right? A kindergarten it can easily cost up to 10K a year.
Yeah, I thought that's quite standard.
Yeah, 10K a year standard but if you have 2 kids going for kindergarten, right? This is just like for the school fees, Sometimes there's additional. Teachers say, tomorrow we got outing lah, this and that. And then now some more, birthday celebration.
Oh.
Then you have to like prepare a celebration at the kindergarten for all the kids. You are like, shit, money again, right? So it can be something very, very, it can be a very huge decision to make at the time, because you need to allocate money with the budget. And so there's a budget constraint in the young families. Okay.
I want to ask, during your time, right, when you started, entering into these life stages, how do you face it? And what do you do about it?
How do I do about it? Like I mentioned, like what I mentioned just now, I'm looking at my priority because I don't have much debt. That's why life insurance for me is I don't need that much at the moment. I'm looking at how am I continue, what is the income loss if I cannot work anymore.
Yes. That's why you focus a lot more into the critical illness.
Yes. And then my lifestyle is like I sleep lesser.
Where we actually share the same lifestyle.
Yeah. Although we exercise, but we sleep lesser, right?
Yes.
And then a bit of drinking.
Okay, that one I don't drink, but I do smoke.
Yeah. So I smoke a bit, right? But the thing is, my risk assessment is at this current stage, at this time, what is the most crucial? What is the most crucial? That's why I focus on my critical illness first, because I don't have children yet. Yeah. But at the same time, it also doesn't stop me from preparing just in case. So the question is, what if when I doing my financial planning, the what if is I always ask myself, and then at the end of the day, is it a huge decision to make? Actually, not really. Actually, not really.
When you
Because-
started planning, it doesn't felt as overwhelming. But
Yes.
when you are like avoiding it, okay, I was at the point that stuck there. I was like,
Yeah.
oh my god, we are very committed already that time. Then we started to plan for buying houses together, investing in another new property together. I was like, hey, I'm supposed to do that because that time I'm already an agent. So I was like, oh, I'm supposed to do this already. But I did escape from it for I think like a few months. Until we have to sign the S&P already, no choice already. Then 1 week before that, I talked to him. I was like, hey, you know what? We are going to have the share. Okay, our planning is that I will buy one and he buy one. So what happened is that although share but like not share, so I say, you know what? Let's better protect each other. So we hiba each other to protect each other. Then. I actually did it like 1 week. We actually signed that 1 week before we signed the S&P.
Okay.
So that was my experience. And later on, I think when we started to live together, our family know each other and everything, we realized that our first HIPAA policy is not sufficient anymore. We wanted more protection. So that's where we signed up another. So it's also the same thing. I nominated him and then he nominated me.
Yeah.
So now I die. My family, I mean, those people that I love, they will become very rich. Very rich, actually.
That's good. I think because for us to talk about this is way easier because we understand. So at the end of the day, if we do the planning ourselves, in the end it doesn't become that overwhelming. All right? It doesn't become that overwhelming. And so we started little by little. Small policy.
Hi.
Like just now we mentioned small policy. All right? So budget constraints can be solved when we get the priority rights as a family. All right? And then we can be overwhelmed by choices. All right? You need life, you need critical illness, you need medical, you need personal accident, you need education plan and whatever. All sorts of things. Because I understand that when we, as a customer, when approached by an agent will try to sell you everything. All right?
Okay. A disclaimer, a big disclaimer.
Not us.
Not us. Me, I am not someone who hard sell on the product one.
Yeah.
I hard sell that I want to see you. I want to tell you your current financial situation and then what is your protection gap. That one a very hard one. I will come after you. I will hunt you down. But once I told you everything, I say, oh, this is what I recommended for you. You can have this to close this gap. You can have this to shorten the gap. Then I will leave it to you. I won't hard sell you on the sales because I know that is going to make you very uncomfortable. But I will hard sell you so that you are aware of your current situation.
We hard sell on the solution.
Yeah.
All right. So you can get overwhelmed by choice, and then you don't know how to ask the right questions, which is important. And then if we don't know how to ask the right question, right, sometimes it's very hard for agent to actually guide also. So the job of us as an agent is continue to fact find and then trigger, okay, actually you need this, actually you need this. So if you can sit down properly, looking at your choices and then speak to the agent, especially me and Seph, all right, you won't be overwhelmed. Because why? In here, we focus on the gap, on the protection gap that you need. All right. So let's say there's no already have education planning, but the breadwinner don't have sufficient amount of coverage. Like I mentioned just now, we should protect the breadwinner first. Then we focus on giving an income protection for the breadwinner. Okay, it's about balancing needs versus wants. All right, you of course, if I can, I get everything, right? But what I actually need is something different. It's something different. Of course, another point is, I think a lot of people, they're worried of mis-selling or they trust the wrong person in doing this. So when you have the fear, you actually want a protection, but when you have the fear of making the wrong decision, right, then you will stop making decision. You will stop making decision. So if any of our viewers out there, if you have any problem with this, right, do let us know. You can DM us, you can WhatsApp us with the number on the screen, all right? drop a comment, and then we will help you to go through this stage. We'll help you to go through this stage. Because, and then here are some tips for how a small family or young family can start planning. Number one, always remember, protection comes first. You must plan for your medical protection, plan for your income protection. This is always number one. Okay, number two, you should look at how insurance can be a good exit strategy at the worst and expected situation. What is the worst? Critical illness, disability, and death. These three. Okay. The last one that you said, save for the future. The last thing you can consider is save for the future. Getting a saving plan, investment, or retirement planning. Right. The first two is to get the fundamental rights first. Secure it first, then you can go for savings and so on. So I would like to share a case that this one also a roadshow. While I was doing roadshow, this client suddenly approached. He just told me, I want to complain. I was like, okay, come lah, complain. I listen. So after complain, right? Then he say, I need to plan something for my younger son. So it should be protection or saving first. So I say, you know what? When it comes to protection, right? Because both of you working in Singapore, both of you are the sole breadwinner. So you should look at the protection first. So I did a policy review. When I did a policy review, I said, hey, your protection is very good already. You have very sufficient amount for yourself. So in case when anything happens, right, this money can actually sustain for quite a long time. Okay. So so now we can look what your younger son need. Number one, I say he needs protection first. Because why? Because you got saving, you don't want anything happens, right, to him, and then you have to use the saving to pay for it. Right? But actually told him, I said, actually you can do both at the same time. He said, you mean? Then he said, so you mean I don't need to get another education plan for him? I said, no. Actually, with an investment-linked policy, you can actually do both. Right? Of course, with medical protection. And then the CI is very important for the children as well. Then he said, why CI is important? Still young, ma. Right? I say, yeah, but we don't know. He say, you never know. But let's say if the child is sick, as a parent, one of you would take would take leave and then take care of the children. But if one day you have to take a long leave just to take care of these children, right? So one of you will lose the income, correct? So this CI, right, is actually for the person, for the father or the mother who letting go their income to take care of the child full time. All right. So this is actually for either one of you as well. All right. And then he asked me, how about the saving? All right. So this is the time I show him the features and the fund performance. Then I said, how you can do this, manage it. So you will still do a small amount of saving inside the investment-linked policy here every month. But every year, you can plan it once or twice. All right. I give you an example. Like one of my client, every year his children got the angpao money, he will take the angpao money and then put inside this investment fund. Yeah. So this is how you can plan for it. So you can have both at the same time, and then you don't need to pay for two different policy. Then he said, wow, this is something that no one had actually told me before. Yeah. So he said, before this, I was been overwhelmed because they keep pushing me this and that, and then I don't know how. I say, now I know, actually I can do this. So yeah, in the end, he take out the policy, and then he's been my good client until today. Yeah, right? So, okay, so Seph, back to you.
Okay, there's another topic I would like to share, which is why insurance isn't just for now, but it is for tomorrow as well. This usually is a more longer term already. So this is where you started to have more commitments. You wanted to have higher protection, but instead of just getting an insurance that protects you for your commitment, you also can opt for the product that can actually have multiple function, meaning that while you are paying for the insurance, it gives you the protection to leverage with. It also helps you to save money. And policy like this, often they have a reward features. Meaning if you keep this policy until a set amount of time at a certain age, according to your age, then you'll be able to receive a reward. They're going to grant you the reward other than on top of your cash value that's inside. So this is very good because not only they give you the protection, they can also help you for your retirement planning. And it also future-proofing for the inflation and uncertainties because there are certain products when it comes to this, right? The premium is fixed. They don't usually increase price for premium like this. And a lot of people also use this for legacy planning. So when, let's say now I'm 40 years old, I wanted to increase my protection already. So instead of just buying the insurance that only provide the protection, I can opt for this product. So it provides 3 features. First, it protects me now. Second, it helps me to save money in the cash value inside. So touch wood, if I suddenly need money, I can still withdraw money from inside. And last but not least, if nothing happens, I'm all well, healthy and all, until my 70 years old or 80 years old, depending how we design the policy, I'll be able to get back a large sum of amount of money coming back from the policy. So these are the policies that attracts quite a lot of people. This large amount of money, you can decide. Because these policies are designed in a way one. If let's say now I no longer need that protection, I no longer need life insurance, say maybe I'm 70 years old, all my children all have their own job, they are financially doing quite well on their own already, then I say, then I might not need the life insurance anymore. So I can just cash out everything, I get the reward, I get all the cash value inside, then I just go around and spend it however I like it. Or if I wanted to have a life insurance during that time, then I just continue. I still can get the money out from there. Then I just continue paying the premium so that I have life insurance until I'm 100 years old. There are also other benefit that when it comes to this is that if, I don't know, let's say 3 years from now, I suddenly diagnosed with any of the critical illness, and it could be very close to a terminal one, I don't really wanted to continue treating it. So what happened? I get the critical illness payout from here. I can use it however I like it before I leave this world. So there are few ways. Whenever I plan for my own insurance, that's how I look at it. And back to you.
Okay, I think from what you mentioned, when it comes to legacy planning and whatever. And then I agree that an insurance or takaful plan can be something that have multifunctions and serve different purpose at different time, different need. So what we need to do is we have to do assessment for our needs from time to time. Okay, and then we have to understand that our coverage should grow with our responsibility that getting heavier and heavier. But throughout the times, maybe our responsibility will getting lesser and lesser. So from the time, we also have to review again. Like, let's say I don't have this much responsibility. I don't have this much debts already. Should I reduce my life coverage? Maybe yes. So that's why I buy small policy.
Okay lah, not necessarily buy small policy. You also can lower lah.
Can lower lah. But just in case you have a small policy, right? Then at the time maturity, then cash out lah.
Yes.
Correct. So this is to ensure that throughout this life journey, different life stages, you can safeguard your assets. You can safeguard your hard-earned money. I have clients who are young working adults. They are high performer in their career, in their position. They are very good in their work. They earn high income earner lah. Consider at their age they are high income earner. I always tell them one thing: you work so hard, right? And then you are single. Are you going to plan to leave any legacy? They say no lah. To who? Right? I'm not a charity, so don't need to give anything. I say yeah, you are right. But one thing is, if in case anything happen, and then all your hard-earned money gone, are you happy?
Of course no.
They still tell me, no lah. Suddenly one night everything gone. Say, how about if I can turn things around for you in case anything happen, right? Your hard-earned money will still be with you. Your investment, everything will still be there, and then slowly creating passive income for you. But at the time of emergency, and the time you need the most sum of money being cashed out, I'm the one that you look to, and I can provide you that. Is that okay?
Yes.
Is that okay? So how much you want? So at this point, right, my client will like, okay, so how much do I need? I said, let's calculate the loss of income for the next 5 years if something happens. But also let's calculate in these 5 years, right, at what level of your income will grow. So they can grow about this, then probably I need this. Right? So let's just fulfill the gap. So this is indirectly, instead of just creating legacy, but it comes with doing something different for themselves. And then, of course, one of my clients, she wanted to leave something behind for her niece and nephew. So we planned out something differently. It's still a critical illness coverage where life coverage comes together. I say, in the case of anything happens, you can choose whether to keep this policy and then pay out the life coverage, or you can take out the money. Either way is good for you. So, and then it comes with saving as well. I have clients who like, okay, I need about 4 or 5 million. And then at the same time, if nothing happens, I can cash out the money anytime I want. So he wants the security now, and also he wants a financial security during his retirement. So we have plans that can cater to that. So from time to time, review and talk to your agent so you can assess your risk differently, and then you can make your decision differently. So to make sure that everything is secure. Everything is secure. Right. That's from me, Seph.
Okay. Okay, editor, is there any question that we have yet to answer? Can you put it up? Thank you. Okay, coming from Melissa, heard that you guys do roadshow. How to know about roadshow? Okay, you can contact me or contact Moses. We can tell you more about our roadshow. And actually, we are also doing a booth camp. It's totally free to participate. So when you join our booth camp, you actually understand how our insurance company works, how our agency works, and how our roadshow works. So it is totally free that when you join us, we actually detail to you how we run this roadshow and how you can join in as one of the participants. And again, being gratitude, we don't hard sell you on the product, or we don't hard sell you on recruiting one. We just let you in, see, understand us, and in the same time, we are also assessing now because we have very high criteria when it comes to recruiting people. Often people fail. So only if you wanted to, then you can check with your recruiter. But anyhow, to know more about our roadshow, you can either text me or you can text Moses. We are more than happy to share with you. And then the best way to understand much more detail is to join our booth camp. This month, our booth camp is, it's actually end of this week.
Yeah, it's actually this week.
27, 28.
Still open for registration.
Can. Still open for registration. So if you are interested, please contact me, Seph, or please contact Moses. We can help you out. We can help you to register in. It's totally free one. So I have people who are, year come and just join to understand the whole thing. And you don't have to have the intention to join in as our career to understand this. You can just drop by and understand. Yeah. It's totally fine.
I think the bootcamp is a really good chance for the people, for most of you out there, to actually understand how insurance business really works. It's not just about selling only, but it actually requires a lot of skills. And then the reason why, for me, my personal opinion, bootcamp works as a two-ways interview. Like you interview our agency, like how this agency work. Second thing is, we do assessment and we interview you to get to know that whether you are suitable in the business or not. We're not gonna sugarcoat everything. All right, we're going to tell you the truth of this business. What is the challenges? What are the challenges that you're going to face? What is the problem? This and that. And then you understand whether you can cope with it or not. So come and join the bootcamp. It's free, and then you get a chance to know insurance industry a little bit more better. And then, of course, at the end of the day, like Seph mentioned just now, we won't hard sell you or force you to join. All right. It all depends on your decision and also our decision as well. It's also our decision as well. So yeah, that's all regarding
To the
roadshow.
questions.
Yeah, regarding roadshow. All right.
Okay. Editor, is there any more questions? Okay,
no
no.
more.
It's
Right.
about time. Wah, ngam 10 o'clock. Okay, I think we will wrap this up.
Yeah, I think
Okay.
let's talk about GIO first.
Okay.
The last one.
Mm.
All right. So yeah.
To
So,
repeat?
To repeat again, currently AIA is running a campaign. It's called
Only once.
Only once. All right. It's called Only Once Medical Top Up Campaign. This campaign is specially dedicated to AIA loyal customer who have held their medical card for more than 10 years and above. So if you have very, very old medical product and just in case that last time you are not entitled to upgrade anymore due to any health issues, all right, these are the chance for you to actually top up your medical card annual limit from 1.5 to 18 million.
Yes.
All right, to 18 million. So you can choose, right? And then this campaign actually started early of this month. Okay, it's a medical card top up for existing customer, and then it's a guarantee of approval with no medical checkup required, no medical report needed. There's no financial underwriting. That even if the person have diabetic heart disease or past history of cancer or any medical history before that stopping you from upgrade, right? These are the chance. Because somehow it work like this. You have your old policy A, and then you come up with new policy B. So you have two policy together. So it top up on the annual limit. And then you can instantly boost the annual limit from 90,000 or 100,000 current up to 1.5 million, 5 million, 8 million, 12 million, or 18 million. All right. And then more good news is there's no waiting period. There's no contestable period. All right. And then it's a guarantee acceptance right away.
Yes.
If you are interested, right, just text us. WhatsApp
Let us know your IC.
Yeah, let us know your IC, your full
We can
name.
help
We
you to
can help
check.
you check in the system. And then the approval is very fast. 5 minutes. Gao tim. All right. 5 minutes. Gao tim. All right. So think about it. If you want us to check, can DM us right away. All right. So Seph, back to you.
Okay, so that's all from today. Thank you so much, everyone. Thank you so much, everyone, for spending the night with us. If you have any more questions, here's our phone number. Here's Moses' phone number. Or you can DM us in the Facebook, whichever that you find it comfortable. So that's all for tonight. Thank you so much, everyone.
Thank you, everyone. Thank you around on Facebook. Thank you, my friends on TikTok. Thank you for watching this live. I hope this live, the topic today, can bring benefits to you. If you still have any questions, all right, regarding your insurance policy, you're getting a problem with your insurance claims or anything, feel free to DM us. All right, feel free to DM us. If you're interested in joining the bootcamp this week, DM us as well.
Yes.
All right. Thank you very much, everyone. Have a good night.
Have a good night. Bye.
Bye. Bye.